Good morning this Wednesday, the 2nd of August. I'm Grady Bull for Market Analyst with Bell Direct. US equities closed mixed on Tuesday as investors digested corporate earnings results against the release of key economic data. The S&P 500 fell 0.27% and the tech-heavy Nasdaq lost 0.43%, but the Dow Jones reversed earlier losses to close up 0.2%. The key economic data released in the US again came in favourable, showing signs of resilience in the US economy against cooling inflation to support the idea that a soft landing is expected over a recession. JOLTs Job Openings data for June showed the economy added 9.582 million jobs over the month, down slightly from May's reading of 9.616 million, and US PMI manufacturing data for July came in at 46.4 points, a slight uptick from 46 points recorded in June. Caterpillar shares rose 8% on Tuesday on reporting stronger than expected results in the US, while shares in pharmaceutical giant Pfizer slid after the company posted a mixed result due to COVID product sales plummeting. Uber also lost 6% on mixed earnings, and JetBlue tumbled more than 8% after cutting guidance. Analysts suggest the pullback in stocks on Tuesday was simply due to an overbought market on the back of strong earnings results so far and favourable economic data. In Europe, markets closed lower on Tuesday as investors digested corporate earnings results released in the region during this busy week of corporate results being released. The Stoxx 600 fell 0.88%, Germany's DAX lost 1.26%, the French CAC shed 1.22%, and in the UK, the FTSE 100 shed 0.43%. Eurozone manufacturing activity also fell in July at the fastest pace since the start of the COVID-19 pandemic, while a report on Eurozone inflation showed inflation eased further in July in the region, gaining just 1.9% through the month, according to Econ data. Locally yesterday, the ASX 200 rose 0.54% as investors and Australians alike breathed a deep sigh of relief as the RBA announced a hold on rate hikes for a second consecutive month. Every sector closed in the green yesterday, but the sectors that benefit most from lower interest rates felt the biggest rally, led by the tech sector jumping 1.14%, while consumer discretionary and real estate stocks rose 0.77% and 0.43% respectively. The RBA has held the nation's cash rate at 4.1% for the month ahead, which sparked a sharp rally in afternoon trade on the local index. RBA Governor Phil Lowe said the pause will provide further time to assess the impact of the increase in rates so far to date and the economic outlook. In a similar note to last month, though, Mr. Lowe also warned further interest rate hikes may be required to get inflation to the target range of 2 to 3% from the current annual rate of 6%. Over the last month, we have seen favourable economic data drive the RBA's pause decision yesterday, including inflation cooling and retail spend easing. Services price inflation has remained the sticky point overseas, and the RBA fears the same could occur in Australia. All eyes have been on the Chinese government over the last few weeks amid speculation further stimulus policy will be announced. This did come on Monday in the form of China releasing a policy document containing 20 measures to restore and boost consumption in the region, including consumer loans to encourage car purchases and building more affordable homes for young people. On the commodities front this morning, oil is trading down 0.5% at $81 and 39 cents a barrel. Gold is down almost 1% at $1,944 an ounce, and iron ore is down 3.06% at $111 a ton. One Aussie dollar is buying 66 US cents, 94.76 Japanese yen, 51.94 British pence, and 1 New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are expecting the ASX to open 0.53% lower for the midweek session. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the price target on Gold Road Resources from $1.95 to $2.05 and maintain a buy rating on the gold miner and producer following the release of the company's second quarter CY23 report, including 76,000 ounces of gold produced, which topped Bell Potter's expectations, and all-in sustaining costs coming in at $1,620 per ounce, which fell below Bell Potter's expected $1,885 per ounce. The company also upgraded guidance for the calendar year, and Gold Road is setting up for a big CY24. And Trading Central has identified a bullish signal on Cedar Woods properties, following the formation of a pattern over a period of 397 days, which is roughly the same amount of time the share price may rise from the close of $5.19 to the range of $6.80 to $7.20, according to standard principles of technical analysis. And that's all we have time for today. I'm Grady Wolf with Bell Direct. I hope you have a wonderful Wednesday, and as always, happy investing.